Hello traders, the title of the video is revealing a common third Elliott wave count mistake. All right, this is it. We're going to reveal today a common third Elliott wave count mistake. All right, so we're going to count wave now. So you can see here, I have here my first wave, a trending first that becomes the first wave, and we have the second wave. So this pullback plus the consolidation here, that's the second wave. So that's the second wave correcting this first wave, right? A very expanded second wave because it took almost 13 years for that correction second wave to be completed. So we will expect the fourth wave to be quick. Talking about the time it will take for the fourth wave to be completed, and a lot of traders will say this is the fourth wave. So before the fourth wave, they will say this is the third wave. It is the third wave. That's the question. It is the third wave. It is the fourth wave. Are we now in the fifth wave? So look at it, all right, and let me know in the comment section whether you agree that this is the third wave, or this is the fourth wave, or whether this is the fifth wave. Okay, so tell me honestly what you have discovered looking at this chart, the financial instrument that we are analyzing today. Can you believe it? It's coming. Did I say to you I'm speaking with my Texas accent? The name of this company is called Texas Instruments Incorporated. Texas Instruments Incorporated, EPIC TXN, Tango X-ray November. I'm on the monthly chart. This stock belongs to the Nasdaq 100, all right? So it is the third wave. So we are talking about a common third Elliott wave count mistake. And this is one example here. This is not the third wave. Why? Because when we apply the Fibonacci extension to this supposed to be first wave, the third wave did not reach the 161.8% Fibonacci extension of the first wave. It must reach the 161.8% Fibonacci extension level. The 161.8% Fibonacci extension of this first wave is somewhere up there. So if one is calling this third wave, that is a speculative third Elliott wave. In fact, according to the Elliott wave rule, it is a third wave count mistake. It is a common third Elliott wave mistake. But if we switch to what we call speculative Elliott wave count, or meaning that we are not adhering to the Elliott wave rule, just playing, all right, like a children with the Elliott wave rule, knowing exactly what we are doing as a speculative Elliott wave count traders, well, that's up to you. All right, so it's not. All right, another trick that you can use to find out whether this is truly the third Elliott wave, if we go to the yearly chart, okay, you see here, you see the yearly chart. Now, okay, there's more I want to tell you. You see this section here, you see here, the yearly chart, you see this, how the first we got this one, the top of the first we got a shadow like this. When you see that like this for the first wave, all right, you need, very important point, you must go into the mind of other traders. Very, very important. That's why I'm recording this video today. You see a first wave with a long shadow like this, all right? After you have counted, after you have said that this is not a third wave, try also to go into the mind of normal Elliott wave traders. I'm not talking about speculative Elliott wave traders. So what you need to do is to move your Fibonacci extension to the closing price. If you do that, all right, and then you will say, oh, all right, George, now you see it goes above the 161.8%. You see 161.8% Fibonacci extension level of that first wave, because you are discounting, all right, what you are doing, in fact, you are discounting this shadow on the yearly chart. You must do that if you see the first wave, okay, ladder. So what you need to do, you need to pay attention to those traders that are counting or with their wave like this, or those traders that are discounting the shadow here and count your wave. So in that case, you say, okay, this is a valid third wave. All right, and then the fourth wave, and then you will say fifth wave. So those traders will say we are in the fifth wave. Okay, you must do that. Very, very important. Very, very important point. All right. I explained to traders also how I quickly spot the fourth wave on the yearly chart when I see the third wave with a shadow like this. So when you did it like this, you say that okay, now this is. So some traders even on the yearly chart after putting the Fibonacci extension, the closing price here, some of them may say, Joe, this is the third wave here. No, it's not. It's not. If you put it here, the third wave is here because of this shadow again here. I talked about this before, and I'm not going to talk about it again. So this is another example here. When you see that shadow, take it into consideration. All right? And also now then again, you put it here also. So you put it here, you see that, George, if I see like this, if I consider this, I will say that this is not yet the end of the third wave. All right, because it did not go above the 161.8% Fibonacci extension level. But I'm aware of it. The other trader who put it like this will consider, okay, this as the third wave, the fourth wave, and the fifth wave. The reason why you must do that exercise is to help you avoid, okay, fighting against other traders, or to avoid that those traders mess up your trade. Very, very important. You want to know who can trade against you. Good to know. It's good to know the traders that are likely to trade against you. All right. So when they are doing that thing, you know exactly how to handle it. All right. So this is a common third edge wave mistake. All right. So, so you may say, Joe, is it correct to do it like this? Well, if a trader is happy with it like this, that's fine. But the only thing that you can't afford to avoid to fight, okay, is the market pattern. Draw your trend line. So like here, if you did that, you connect the high of that support. So if you put your Fibonacci extension here, this will be the top of your first wave, not here. So you connect the top of your first wave to the top of the third wave, and you leave it like that. Okay, you see here, yeah, and close below it, yeah. And then you went back above it, you leave that trend line there. Even if you don't consider, you need to draw that trend line there like this. All right? Okay. The most important thing is to find trading setup on the edge. All right, so you simple trick is to use like here, use here it is, a measuring stick. When you are using a measuring stick in this case, don't put it all the way here. That will be wrong. The measuring stick to set a price target, you draw it from here to the low of the second wave, and then you project it up here at the closing price. The idea is to set a price target, and then you're going to set your first target right there. So what you are doing, you are mapping out the chart. All right, that's what you are doing now. You are mapping out the chart, and then it goes above it. You project it one more time, and then again you draw another line right there. Are you getting it now? So you will come across a situation like this, and you'll be wondering, what should I do? What should I not do? Flow with the price. Map out your chart and flow with the price. Look for trades that you see here. So the first price target, using that measuring stick like this, instead of breaking it all the way from the top all the way down, like this, has been very useful. You see, he breaks the bow, and it's not by mistake here. A lot of traders know that, professionals know that. You see, breaks the bow and retest it. You see here. So that projection, that price target, has been very, very useful to us. Yes or no? Can you see that? Place a ball, retest on the monthly chart. This is a bullish trading setup. Implement a top-down trading method, or use the TSTWS or S008 trading system to trade like a pro. Look at that beautiful month. So this is the month of November 2019. You see how the body place a ball, retest, implement a top-down trading method, and here they are. All right. Now, at the same time, after doing all those, we connect this. When to that point there, you leave it there. Now it's a ball. We can pull back to retest it like that. Very, very important point. And the next thing that you need to do, Here it comes, my friend, automatically. Automatically. Are you a machine? George, I'm not a machine. Why are you talking about automatically? All right, so you just. Okay, roughly, okay. Roughly, something like that. Okay, we leave it there, like that. Okay, and then you apply. Oops, okay, I'll move it again. All right, I'll change it. You draw your P4 tool like this, again to the closing price, to the low of the second wave like this. So our first trend line is there, and you leave that. You see again, the pitchfork tool also was useful to see it pull back to retest the median line, or in fact, this is what we call a hot spot trading zone, intersection of any part of the pitchfork tool and any horizontal line. A hot spot trading zone. Try to make it a little bit hot for you. All right, here it is coming hot, a little bit hot. All right, really hot spot trading zone. That's it. That's a hot spot trading zone. Beautiful. Look at that. Beautiful. Now we are again price target. You see, we took profit again at the price target level. So this is a short tutorial to show traders. All right, talking about revealing a common third Elliott wave count mistake. All right. Now, after you have done that, you need to. All right, very important. All right. Okay, I'm moving some line. Okay. All right. Okay. If you call your first wave like this, I call this one second wave, you will say now this is not yet the end of the third wave. You expect an extension. At the same time, you go into the mind of the speculative Elliott wave traders, and traders also, all right, who count the first wave ending here, especially on the yearly chart, okay, and then instead of putting it here, all right. So that's why. So to avoid the third Elliott wave count mistake, all right, very important point. Use the Fibonacci extension, apply to the first wave, all right, and then switch also to the yearly chart. If you have a shadow like this, place it here, first wave, but don't ignore trader who put it also here. Apply the pitchfork tool, connect the high right here at the closing price to the high of the third Elliott wave. Use the price target as I did it here. Don't draw the target all the way from the top, but from the closing price to the low of the third wave. And then you want to spot, okay, the price target levels. Right, put it on top of the closing price here. And you set that first target. You see here, beautiful. Apply also the pitchfork tool. All right. Is that too much ask? I'm not asking for too much, my friend, all right? Calm down, it's not too much. All right, so if it's too much for you, okay, take it one step at a time, all right? Use a demo account, practice. You can go through scroll down through many stock, all right? And then see if you will see another example and then try to play with it. That's how you're going to learn more. So you can go through them, all right? Go through a lot of stuff to see if you can see something similar like this with a shadow on top of the first wave and play with it and see what you come up with. Now that I'm switching from the yearly chart to the monthly chart, you see that things look a little bit differently. Or you can see that shadow on the first wave is not visible on the monthly chart, but it was visible on the yearly chart. That's why very important. If you want to avoid that third Elliott wave count mistake, you want to see that yearly chart. That's why I will never use a trading software that does not show the yearly chart. Never, if I'm counting with, unless that's the only thing that I got that I can afford. Okay, unless, okay, that's it. So you see now, here it is. If this video has opened your eyes, all right, and you start seeing double, everything looks double to you, all right? Now, this to make you laugh a bit. If this video has been useful to you, please let us know by giving us the thumbs up. If you dislike it, you have to mark it down, please, all right? I want to know how many traders are hating me on YouTube. So, okay, now this is to make you laugh again. If you dislike it, please mark it down. Please mark it down, please, all right? If you say that, Joe, this is a useful tutorial, have you ever shared one of my videos before? or you hate me so much you never share one of it. If you never share one of my video before, please share this one. All right. Subscribe to your YouTube channel. 24 Elliott Wave. Be sure to click on the notification bell so anytime I record a new video, you will be the first person to be notified. You have any question, suggestion, blah blah blah, put in the comment section. Some trader did ask me to review Dow Jones, crude oil, and so on. I haven't forgotten you. In due course, all right. Have a reason why I do it sometime. In due course, we will look at crude oil, we'll look at Bitcoin, we'll look at Dow Jones one more time to update traders accordingly. We are the TSTWSYS008 traders talking about revealing a common third Elliott wave count mistake. George, why were you revealing? There was no secret at all. Okay, let us know your thoughts in the comment section. Happy trading to you all.